Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday. And we're at the 16th of June, 2020, 6 p.m. Central Time. As you know, I'm doing these later because I want to get into the openings of the next day. I want a little bit of the chart action for it, and it gives you a better sense of what's going on. Now, before I get too far, at the end of this, I'm going to talk about a combo package that we've put together now, and it's on our website for those that want to try our subscriber videos that include both the morning subscriber video and the afternoon Spider ETF video. Introductory price, about $17 for the first 30 days. You get to see both. Pretty interesting. All you got to do is go to our website, www.iraepstein.com. Under the word research, go to either the Spider or the morning subscriber video. You'll see as you get into them, you'll see the combo pricing. Scroll right down to it. Okay, so today, what was the market about? A huge jump in retail sales, the largest one-month May jump on record. Okay, but when you're coming from the depths of HELL, to get a big jump up, is that important? Well, it is and it isn't. So let me explain the thing. Is the glass half full or half empty? That's really what it's about. And the market's looking at it that it's now back to half full. It's a better thing than not getting the sales up. There's more to come this summer as more cities open up and the bigger cities open and people hit the stores. That's what it's about. It's not about, well, it's only 17% and we're still stuck. I'd like to tell you, I understand. I saw someone write that, and I get what they're saying. It is not lost on me. And it is not a change. It's the first blip up. You know, I think bad things are going to happen. I think that we're going to see a massive amount of these small mom and pop stores fail. I don't see that what the government's doing, the Fed buying these corporate bonds that might buy, who knows, Cheesecake Factory bonds. I don't know what they're going to buy yet. They're not buying your mom and pop stores. And how are those people going to survive? How are the smaller retail restaurant chains going to survive? The one restaurant guy? I don't know. But we're going to see that there are problems, and these problems are all being masked. Rightly so. The first news that's good is euphoric. We also had today a breakthrough in a treatment for COVID. That was good news. A treatment. It's not for everybody. A third of the people that took it did well with it. 2/3 did not. It's still better than nothing. The Fed chair is speaking right now in front of Congress. Today he had his first session. Tomorrow he finishes up. Do you honestly think he's going to come out and say things are terrible? No. He'll warn what could set things bad, but then he'll say they're there to commit to everything to keep the market right, and they're not going to look at their balance sheet. They're not worried about the capping of a yield. They haven't even discussed it in detail. He's not going to say anything to hurt the market. Bet on that. Okay. So that's where I think you're at. So when we take a look at the action in the market, we can see the previous two peaks that we've had in the market. And I don't know if this will be a peak or not. So far, it's the most recent high, okay? And remember, this is just of closes, not interaction data. And that was made so we get a sense of timing on it right here, and that was June 5th. It's certainly not far ago. This is only the 16th, my friends. So there's time here. We'll wait and see how the market keeps going with it. When I come to this chart, this big break low that you had 2 days ago certainly looks like a spike low, like that was a spike up high. So maybe we're caught in this trading range in between these two right now. When I look at the action, I do not see a trend. I define a trend as having a pattern of higher lows and higher highs. That was broken from this high when you broke through this low. So now you've got a lower low, a higher high. I don't call that a trend. That is a market that had the washout of the longs that maybe didn't get out soon enough, the people that were bearish. It could be anything. It doesn't matter. The chart action is the story of no trend. Where did the market fall? Well, let's come back together. Moving averages are a very popular tool. And as such, people look at them for different reasons. Example, you had a bullish crossover here where the 18-day in red got over the 100 in green. Then it got over these. Well, as you can see, the market fell back into these supports just recently. That's all it's done. And it's finding its legs into that support. That's what basically happened. Did the market from these crossovers make new highs? I don't think they did. I don't think you can say that. I see the market falling back into a support level without a trend. It's keeping the bias up since it's over the 18-day average, but I'm going to repeat, I don't see a trend right here. When I take a look at Bollinger Bands, we use them because you got to think of them as fences. This is the fence on the upside. The kid keeps hitting it with his tractor, keeps getting thrown back. You know what I'm saying. Right here, the same. If the market drops down, I'd look for that. And often you trade within them. What's the percentage of time you stay out of a Bollinger Band? 5% of the time. When it comes out, it often comes out of a real tight trading range because you've built up all this power. I call that a pipe that it was trading in. And when it comes out, it unleashes a fury at the market. You've seen things like that, and that's where you're at. I don't see that here. This market's not in a pipe. This was the pipe. And the market, instead of the drama that we had on this break, it was orderly, but the market went from 2,900 up to 3,200. That's a heck of a move. It's not a small move. When I look at momentum right now, we had a correction. The market was pointing down. It found its legs here as it was pointing down, and momentum is just flattened out. So that makes sense to me too. In summary, I don't see a trend right now. In the Nasdaq, the trend is up. You still have a pattern of higher lows and higher highs. Now this was set in place when this occurred. First of all, this break low never took out this one. What we had prior to that was a lower low and a higher high. But with the breakdown we had over these past 2 days, you're waiting to see how far does it go down. And if you understand the swing line, I wrote the study. So this is the baby I created, and I know how it works. There's no other expert. I guess other people could become, but I wrote it. I didn't share it with anyone. I wrote it on my own. And I'm telling you that you now have the pattern of higher lows, higher highs, which is bullish. You had that yesterday, actually. You were creating it. And now you're just getting to an area where, guess what I'm expecting? I'm expecting resistance right here at that upper Bollinger Band. How often do you get through the Bollinger Band and stay over it? 5% of the time. So coming down this far and getting to it, maybe it gets a big piece of news to kick it off. Maybe the Fed's ready to do something we don't see, but I'm not quite seeing that. I am seeing momentum is flat, but overbought. Both numbers over 70. When both numbers are over 70, that's not the same as being over 80. They're just overbought. You've spent some power here. I'm looking for resistance right there. Not bearish, but overbought, bullish. In the Dow, you ended a downtrend. Now, why? What do I mean by it? If we look, we had a high with a lower high and a lower low. You fell into this region of the 18 and the 100-day. Here's the market. Here's your embedded reading. You lose the reading. You come down. If you take out this low, you lose the uptrend. You're probing to see, can you go down? And today, instead of finishing with the trend lower, the market takes out this high right here. That breaks the pattern. Now you'll have a lower low and a higher high pattern. That is not a trend. So you're just whipping back and forth in this now, looking to see what next, and momentum has gone flat. In the Russell, the whole rally back only carried to the 200-day average. Moving averages are important, and this son of a gun 200-day average is real important in stock indices because so many people focus on it. It's a long-term average, gives you almost a year's worth of trading if you think about it. And traders watch it. They'll watch it in the spiders. They'll watch it they watch it always in the other markets. Now, why is it more important in spiders and ETFs than in futures? I'll give you the reason. Futures contracts expire. A spider or an ETF doesn't. Therefore, they're continuous. Whereas people are trying to say in the futures market, well, I can make a long-term chart and trade it that way. You can do whatever you want. But it's the reason that the 200-day averages aren't as important, and that's my opinion. I can't prove it. I can tell you 5 decades of charting what I teach. That's what I think. So, but you do use it on the ones where you see the masses at. So that's your resistance point. Are we trending? No. You have a higher high, lower low, caught in Bollinger Bands and moving averages and flat momentum. The VIX cash, breaking down again, had its run at the upper Bollinger Band. What's the odds of staying over it? 5% of the time. Market stalled there, pulling back. Neutrality number is right here, 2770 to 71, the combination of the 18 and the 100-day average, and you're not in a trend. You're caught with that lower low, higher high. T-bond market. T-bonds had a breakout to the downside first, right here. I call that a breakout. Why? You had both numbers settle under, on those days, the Bollinger Band in the lower part. I realize the market is probably going to snap back, but that is often a prelude to something else happening. I cannot tell you what always is, it's often. And I look for that. So when the market got up here, I was telling traders, I'm looking for a failure. I'm wrong in my thinking if we get back and close over these numbers. And here's the other thing. I don't look for a large decline. Do you think I want to stand in front of the Fed? The strongest thing I know is the Fed. You never fight the Fed. It's that simple. And if they don't want to see interest rates go much higher, and remember, these are inversion markets, it's one thing to be a trader, it's another to say, oh, I see a long-term trend to the downside developing right now. Okay? You do that. I wouldn't fight the Fed. In the 10-year notes, we have a market that's just making noise here, just going sideways on the 18-day average of closes. The market, if we look here, is in overbought territory with a reading of 70. I see nothing. When we get to the dollar index, when you lose an embedded reading, like right here, that's often a sign, to me at least, that the market is going to make a run at the closest main moving average. Again, the 18-day, not the 200 in this, the 18. Here's the market right now, backing off. I think the pros are nibbling on the long side, trying to get it back up there. We'll see in the next 2 days if I'm right or wrong. It's what I expect. Where would my thinking be wrong? Take out this 95.57. Then I'm wrong, the market. Then market's not going to make it to that. In fact, that would be a pretty good sign it didn't, right? And it would be a sign that you're not going to get that typical action. Go back and you'll see what I'm saying about slow stochastics. It's the flip-flop in the euro. I'm looking for that to get to the 18-day average. You lost your reading. That's often a sign you're going to go there. Longer term, I'm friendly to the euro. Bullish, rather bearish the dollar. That is my longer term charts. Shorter term, they're not agreeing with this. In the Japanese yen, you're just overbought. You've had a vertical price move in the market, and you're not in a trend. You're just drifting sideways in this market right now. Bitcoin. And this is September. I realize June's where most of the action is, but it's time to start looking at this. Do you not see the sideways action? Higher high, lower low, like glue against this number. It's trying to figure out what to do. What's the bigger picture? You're stuck in this pipe, as I want to call it. And that pipe's about, I don't know, $1,100, $1,000 range. But Bitcoin trades in these big ranges. So you have to understand pipes as they narrow and what does narrowing mean. I'm going to call that one of these pipes. It's not ideal. I'd like to see a $500 pipe, but you're not getting it right now. Then we get to the energy markets, and as you can see, the August Brent versus the WTI is gaining on it. Why? If you saw tonight's figures from the API, you have a 9 million barrel net build again. That's not a bullish number. Now in the morning, the EIA is looking for only a 2 million barrel net build. We'll see what happens. Cushing is seeing in Oklahoma draws of about 3.5 million barrels last week. So they're not as tight in supply as they were. But folks, 9 million barrels is still a lot. The amazing thing to me is it was the distillates had the least build, which is jet fuel. Gasoline saw more of a build, and I would have thought more people were driving. I don't know about your roads at home. Are you looking at them? There's traffic jams again. We're in Chicago. It's traffic jams. So people are out, the stores are not open, the restaurants are just tomorrow able to open more in some of the bars. So we're just getting there. Maybe people are coming in all week and trying to figure out where to stay because none of the hotels are open. I don't know. As we look at it though, you're staying over the 18-day average, keeping the bias up, but you've got a pattern that's a correction. Lower highs, lower lows. Not friendly, nothing there. What about WTI? Same exact pattern. We can see the support areas, the 36.78 to 36.90, the 100-day average in green and the 18, and we can see that this market is still overbought. So I'll wait and see what the EIA says. On the gasoline, the market dipped one time into the support recently, right through here, but it's got a bearish swing line. Bearish swing line, upside bias, flat momentum that is staying overbought. I'll let somebody else trade it. That's not a good setup. The market that I'm bearish and remain bearish on is NAT Gas. There's just too much of it, and they keep taking out oil. And I don't believe the IEA, the EIA, or other people. I think high prices in crude oil will bring out producers much quicker than people think. Much quicker. You keep oil at $35, near $40 in the Permian Basin, the ideal well sites, not those that aren't so good. You think they're not going to produce? You know, business is there to produce oil. And if there's demand for the oil, they're not going to give that market share away. So just something for you to think about. But you're now 3 days in a row at this point under the Bollinger Band. There's no edge there, but you have an embedded reading. The first hard rally, I think the pros are going to step all over the market on the first hard rally. So if you like this type of idea thinking, what we did is I listened. We've had a lot of people that have subscribed both to our morning subscriber futures video and they want my spider video. So we've put together a combo. If you haven't tried them, we have a new pricing. You can get both of them for about $17 on our website. If you subscribe, I give a discount off the combined price of them of about 10%, so you get a good break month in, month out. Now, what's the whole play here? Well, when you see the afternoon advantage, as I call it, or you're a spider trader looking for trades there, you're looking to see, gee, what about in the morning? Are the futures saying I should go in or not? Who at trading spiders and ETFs doesn't look at it? Futures traders are always looking at what the futures are doing. They're not worried about the spiders. It's the spider ETF person that wants both. So if you'd like to find out more, just go to the website. By the way, we're up to now 34 charts that I'm covering. I'm going to the 40 number. So if you have charts you want me to cover in that spider ETF, write me. Obviously, you have to be a member to see what I've already covered because, as I said, there's 7 more there. And again, the introductory price, if you want both, it's about $17. So it's a pretty darn interesting deal. How do you get it? www.iraepstein.com. Go to the research area at the top. Either look at the spiders or the morning subscriber video for futures. It'll explain it and you'll see the package. I'm Ira. You have a good day and I'll see you tomorrow.